Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the 30-minute time frame. And down at the bottom of your screen, you can see this inverse head and shoulders pattern, which I knew was playing out. Although I thought maybe possibly the green line would be the neckline. But as it turns out, it is this orange line here. And let me pause and see what that orange line is. Well, here you can see it goes all the way back to our high of 108 on December 17th. And it is a trend line that I drew, about which I made this center line with the green dash, or I made this parallel channel with the green dash center line, although they are at slightly different angles. But the parallel channel I drew with the top of it at the tops of these highs here. We were trading at, I think there should be a third one somewhere here. Maybe not. There's two there. Is there another one? Oh, there's three. This one right here. That one wicks through a little bit. So I drew it with that in mind, and we probably came down to it. Yep, came down to it right there. But we had to, we came down to it there. And kind of push through it a little bit there. Anyway, that is that. So that orange trend line, which hits this point here, they're slightly different. But anyway, that is what that line is. And when we come down here to where we are today, boom, that orange trend line possibly is the more accurate center line of that channel, because here it is the neckline of this inverse head and shoulders, with this shoulder right here, head right here, and now we're forming the third shoulder. But that is just the beginning, because this whole head and shoulders setup here is simply the head, the tip of the head of a much larger inverse head and shoulders. And so the target for this one, drawn right here and placed right here. Now this makes a lot of sense, because heading into the CPI data right here, the yellow vertical line represents the CPI data release, and I knew this was going to play out. So the target here is up around 91,500. I say it brings us up to this red line here, which also coincides with the 55-day exponential moving average here in blue, is stepping down here in blue, and also the 21-week simple moving average in the light aqua color there. Those are both converging right here at the target of our inverse head and shoulders pattern. Now, I do expect a rejection from the 55-day exponential moving average, because that's a tough one to get above. It acts as a really good support and resistance, and coming at it from below, I imagine we would get rejected from it. The other moving averages I have turned on here is in fuchsia color here. That's the 21-week exponential. And this is the 21-week simple. I got both those on there. And in the white is the 20-day simple moving average. In yellow is the 50-day. In green is the 100. And then down here you have the red. That's 200 simple moving average. Now, all of everything is trading around the 200 simple moving average. Bitcoin, the S&P, the Nasdaq, a lot of things, so many things. Now, if you look at Bitcoin futures, let's just go ahead and do that. Bitcoin futures has not fallen below the 200 SMA. It's actually bounced off of it right here. And so has like the ETFs. Well, I may as well look at it. I got to switch to a different. Thing here to get the ETFs up. So, if you look at the S&P 500. It's actually come below the 200, but all of them, Nasdaq, S&P, they've come a little bit below, but it's support, but it's support that's failing now, but they'll come back up there. They're just below it a little bit. I wonder what Tesla is. I heard Tesla went down a lot. Yeah, see, everybody's below their 200. And, it looks really scary. But they'll be moving back up. Very shortly. In about a week. Well, actually, maybe today. Yeah, maybe today. What about Coinbase? Oh, it's already doing the pre-market dealio. Yeah, see, it's below its 200. See, and that acted as resistance right there. We are on the 30-minute time frame. But the reason why I wanted to come here was to look at, like, what I have charted is the Fidelity Bitcoin. And see, we bounced there. So on the ETFs and Bitcoin futures, we're bouncing off the 200 simple. So, I didn't need to do that. I just needed to do that and go back to Bitcoin here. So, potato, right? And oddly enough, the inverse head and shoulders, the neckline is right there on the 200 simple moving average. Isn't that coincidental? And see, we are coming up here forming a shoulder. Maybe we come up here and if we get bad news, we dump. Good news, we blast off. And so where do we blast off to? Yeah, okay. We said right here, but what is that? That's around 92,000, just above 92,000 if we come up to that red line, which I'm sure has some other sort of significance. Oh, you know what? It's simply a trend line connecting this point and this point. Oh, you know what? It's the neckline I just drew. And coincidentally, look at how that is completely parallel to the green top of the green channel I was just talking about earlier. It's just dropped down a little bit. So that pink channel is completely, or that red, pinkish, whatever color trend line is perfectly parallel to our green channel, which I find very, very reassuring. So, if we do get good news, blast up here to 92,000, that would be forming the head with the, well, you kind of got a big fat shoulder here with a little hitch in it, right? The shoulder starts up here where we dumped from, up around 95,000. Shoulder starts there, kind of has like a weird looking shoulder that's in the right there, and then the head is forming right here. We're a little over halfway formed the head, and possibly today or maybe a couple days, but maybe even possibly we make that move in a day, head up to, maybe not. It might take a couple days, as scared as the market is. Maybe we just kind of chop up there, come up a little bit, chop up a little more, and get there on Thursday. At which point I would expect to see a dump. I wonder what economic data we have coming out on Thursday. I'm looking at my computer right now, and basically tomorrow we got CPI and we got monthly U.S. federal budget. Then Thursday we have producer price index and initial jobless claims. We get those every week. Friday we got consumer sentiment, so not a whole heck of a lot this week. I know Japan has some sort of rate decision coming up. I wonder what. I don't have that pulled up, that calendar that has all the countries on it. Maybe that's on Thursday. Who knows? Or maybe Trump just tweets something. And anyway. So that's that. But I want to show you 92,000 is important because why? Looking at CoinGlass liquidation heat map, 1 week. Let's refresh this. You can see the liquidity up here. You got this here, around 84,000. You got this here, around 87,000. And then what do you have up here? Where does that green end? Right there, 91.8. Let's say you get that and you come up to 92. Just right around 92. That would get all these shorts liquidated here. So looks like a good target to me. So I think that is most probably what we are going to do. Unless the numbers are really bad tomorrow. Even if they're just like not so good. I mean, not really good, but just so. I think we still go up there. We're too oversold, and that liquidity is probably too tempting for market makers or whoever those people are that go around sucking up all the liquidity. So that is that. Now, unfortunately, that does not play in. When do we go to 74? Now, mind you, we come up to 72 and we do get a rejection. We have to form a shoulder now after this head. And of course, we're still uncertain. We might get good numbers here, but we don't know what Powell's going to do way over here at this pink line on the 29th the 19th, 1 week after the CPI data. So we come up here to 92, we come down and form our shoulder, which has to be higher than the head. So maybe it comes down to 82. Well, that's not 74. When do we go to 74? Because we're going to blast off after the FOMC meeting. So I don't know when we're going to 74. I really think we are going there. I think there's some liquidity to grab down there. Here we are back at our chart now. To see the liquidity down there, though, well, you can kind of see it here, but I think we'd have to go to like a monthly chart. Yeah, that would be grabbing all this big chunk of green right here. Oh, actually, and then some. Yeah. So we simply went to 74. The longs would be protecting this liquidity right here. They would be protecting their positions with more buying, I guess. But if not, we could go down further. I mean, maybe we could go all the way, we could go down to 70. Huh. Or just above 70, 71, something like that. And what's to stop us? I mean, if we get cascading, maybe they come all the way down here to 60. Wow, really? Is that right? Well, well, well. So, I don't know. As I see it now, this liquidity down here is safe. And possibly how much is here? 50 million on that one. You know, I just don't know. I don't know what's going to get us down to 74 or below. I mean, below 74 to get that liquidity. Maybe the numbers aren't bad. Maybe Jerome Powell says, I'm sorry, I failed and we're heading into recession. Who knows? But, all right. Enough speculating on this crap. Because that's not what I see right now. I see us going up to 92, forming another shoulder, maybe coming down to about 82, maybe coming back down to this neckline, and it acts as support, come back up to about 90K at the FOMC meeting, and then boom, blast off from there. Now, so what would be the target from our ginormous head and shoulders? Let's figure that out. So there's the target I just drew, and I'm going to grab. I can't grab it. Yeah, I grabbed it. Let's put it up here. And we got to move it all the way over here. Oops, I can't. It's something like that. Oh my God, really? Look where it gets us, 108. Isn't that funny? Huh. So that would be really weird. So that gets us to 108. And what would that do? That would form a gigantic head and shoulders with, right? Here's the shoulder. Here's the head. Shoulder goes up to 108. Head goes up to like 110. And then our final shoulder here goes up to 108. And then maybe we dance up here a little bit, then come back down. And where's that neckline? That neckline is the base of the green channel I was talking about in the beginning. Huh. So that would definitely get the 74 attention. Anyway, I better leave it off there. I've been rambling on long enough, so I'll give you something to think about. And but let's just get through these inverse head and shoulders, hopefully, that are going to be playing out here. You can see it better on the daily right there, even. Yeah, so let's get through that, see if that plays out, and then we'll worry about that 108 and what have you later on down the road. All right, I will see you next time.